Good afternoon, evening, maybe even morning for some. This is Dan Hussey from ElliotWave bringing you our live trading room update. Had some nice price action overnight. Many of our markets are slower though. It really depends on where you looked. So let's begin. It's April 25th, 2014 on Friday. Speaking with the S&P 500. As of right now, the S&P has traded equal legs off of its 1882.75. These are the futures high, traded equal legs down. I've gotten a bounce from equal legs into that 76.4% line. That is, what we look for in this inflection zone. We look for a bounce from the 100% line in equal legs to the 76.4, which provides you with a zone to either trail stops or take a first target. Again, if your stops were below the invalidation for equal legs, the 123.6, if your stop were just below this area, a first target of the 1863s here would be just about equidistant from your original entry, allowing you to take half the position off and potentially get free or reduce risk. With that being said, the next big 50% buy is down in 1843. It's very likely that this inflection zone is going to act as a B wave and potentially take us up into an 1873, where we will fill the gap for the S&P and then look for a decline from there down to an 1843. No reason to be a seller per se. This is very technically bullish market. However, it does look like it's in the midst of a correction or trying to pull off a correction here. Now, equal legs down does have the ability to produce a rally all the way to an 1890 or into new highs. So it's just important you get free and let the market do the rest. If you can get free off this level and this ends up being a B wave and the market comes down and takes you out, there's zero loss, no skin lost, and you can be a buyer then down at the 1843s at the 50%, or what we call an ambush long, which occurs when you break when you break a prior swing shorts 50% line, breaks the 618s, and after the 618 breaks, you remove it and draw up the opposing side. In this case, it's an 1843 buy for the S&P, and we'll see what happens with the rest of the day. We've already held a little micro off this low, and we're technically holding it next in the series here. So short-term 1863s to the upside. Dollar yen has also traded into a key level this morning. It's a full 50% low from this 101.33 low to high. The 102.70 has also happened to be an inflection zone to the short side. So that's basically what we have is two areas, the 102.70s and the 102s, and now the market is going to discover and break through one of these. The longs have an additional 102.10 equal legs here, down in 3, up in 3, down in 3. So this is a completed, double 3. It looks like correction into 102s, and you can see that both these levels are now getting their initial reactions, and we should see them push into a 102.25, 102.22, which is first target for this equal legs trade, as well as the first target for the 50% trade. Right, you buy the 50%, the 102.03s. First target's a 102.20. You can see how these two levels have aligned, and so that's the initial inflection we're looking for this morning out of the dollar yen. Again, get free if you're right, you're in a trade for a move towards 103, and a potential break of the short. If you're wrong, at least you're free. And on the larger time frame, we've talked about how going out to a 4-hour chart, there's the potential for the dollar yen had equal legs up, for it to trade down into this 99.60, this next support level for the 4-hour chart. So we're at a very much a line in the sand for the dollar yen. It holds these 102s. It can hold these levels today and rally from here. It can easily take us up into new highs and onwards towards 104, 105 area. However, there is the 50% short off the prior high at the 102.70s that is holding. So it makes it a more difficult trade. We have both sides getting reactions, but both sides are being technical and getting free. So be a bear, be a bull, don't be greedy. Get free, and you can be on either side of these markets with opportunities for moves, either down to a 99.60 or up to a 104. very rarely do you have opportunities like this where you see both sides of the market getting reactions. If I had to pick one, I mean, this morning I'd want to be along at the 102s and get free, because that's the trade that's happening right now. The short already happened, unfortunately. The opportunity to get short was at 102.70. So again, if the dollar yen breaks down, it's an absolute gift down into the 99.50, 99.60 area. But otherwise, we have a support level holding this morning that can take us higher. I'm going to switch over to the pound yen, where we have one of the more bullish setups in all of our yen crosses. Great convergence in the momentum, in either where it's double divergence. Both sides are losing momentum, confirming this wedge-shaped pattern in momentum, which means we have a very good levels, to define risk for a major move in either direction. If you have to be a short, there's very clear trend lines and lower highs here that have built. I would not want to see this market go back above those highs. If it were, I'd want to be out, because that's actually a signal that it's breaking out of the wedge higher. Likewise, it looks like we're heading into a 171.20 to 170.90 support zone here. This is a very good area to look to get long this market if you're not long and free already. It's equal legs down. It's the 50% long of this prior swing, and this triangle, wedge, whatever you want to call it, looks like it's coming to a completion here. So you really want to be a buyer in the dip, because your risk is so tight. If you want to risk a little bit more, down to a 169.50, stop below these prior lows. But I think a stop around 107.40 or 170.40, excuse me, which is risking about 80 pips from your 171.20 initial entries. And then I would buy more at 170.90 with stops at 170.40. That should be good for at least getting free, and for potentially moves to the 176 as a first target, and ultimately a 179 as a final target on this range trade, or range breakout trade that we're watching develop in the pound yen. You don't get these kinds of setups often. You got to be aware and got to take advantage of them at this time. Now, very importantly here, I actually want to take a look at the pound US dollar. Because this is going to help shed some light on the dollar yen and the pound yen. The pound US dollar, yes, it's lost some momentum here. Whenever momentum you have it coming together or diverging, or converging rather, losing momentum on both sides, it just means we're getting to a point of action in the market. Every time they seem to get very close and tight to each other, you start to get bigger and bigger moves develop. Anyway, traded 50%, has traded longs from the 166.90. It's kind of building longs and now flagging highs. It held equal legs earlier this week that got free initially, and we've been basically flagging inside this three-leg move to the downside against highs here. So we have a very clear level of resistance in this market. A very big level here at this 166.20, 166.25 area. Through this level is probably what's going to sit. If you see the pound breaking out through this level and the pound yen moving at the same time, that's the type of breakout that the pound's probably that you're looking for the pound from these current levels. So that's going to be something to look for into next week, because we do have building 50%. We have longs that have built against the resistance level in both the pound yen and the pound US dollar. That's very important to note, that this move might be more pound related and less yen or dollar related. So the yen and the dollar, or the dollar yen itself, could potentially do anything, and the pound US dollar and the pound yen could break out. And finally, if we take a look at another pound cross, the pound Aussie, it's showing us that, you know what, there's something else going on here. That pound strength might be coming back versus the others, because with the pound Aussie, you have a 3-leg move down and a 50% long, both having traded and both now getting free. The 50% long is looking for a 182 to get free from this 179 area. Yeah, this first inflection. It originally traded back in late a month ago. It dipped in, but this is a massive 4-hour level, a massive 50% inflection zone that we've come into in 3 legs that did equal legs. And not only has the equal leg setup, not only has equal legs actually gotten free, but the 50% long is getting a reaction as well. Inside this level, we're seeing 50%, or we're seeing a series of longs off these lows continue to hold once to target next in the series entry lows to target highs. Held the next 50% line, entry lows to target highs, front ran this one by 5 pips. So you're seeing these longs build still. And of course, we can draw up the full ambush long here at a 1,679.50, but we're seeing a different tempo come out of like the pound Aussie, the pound US dollar, and the pound yen all at once. This is more GBP related and less dollar, yen, or even Aussie related. So that kind of correlation between the pound, all the pound crosses, is what's telling us that it's important to watch for the pound move versus just a dollar yen or Aussie move in these situations. Okay. Which is also why there's probably a lot more instability in those others, or lack of trend. Okay. Hopping into the Aussie, let's take a look at the Aussie Yen. So we've traded now into equal legs down. For the Aussie Yen. It's actually just about to the tick here at the 94.60 area. The target, or the initial, the initial bounce for this, for equal legs, this initial equal legs is the 94.90s. So is it this 30 pip bounce that we've basically seen between lows and the 94.90. I'm sorry, 95 area is what's happened. It's a 60 pip range that we've gone into. We're also coming up off of basically broken resistance now as support. It comes in once at this area, twice, and 3 times. And this is important in terms of a, just basic support and resistance. You have these prior highs, even here, prior highs, all broken now and coming back and being retested as support. That's definitely something you want to be aware of. That from a traditional standpoint of support and resistance, areas that we've seen the market get reactions from, the market is in fact, holding broken resistance now as a support zone. And we're down in 3 waves so far. Okay, there's an extension long. Prior extension from the 92.80 to highs here now. That extension gave a reaction once before, and that's the support level that we've run into today. So we're looking for an inflection in the Aussie Yen in the short term, back, up into this 95 to 95.30 area. That's what we're looking for here. Breaking down back below 94s. Now we're talking about potentially much bigger daily levels getting reactions. And this is what's scary about the Aussie Yen, is that there's a 50% short off the prior swing, which you can see here, that is in fact still holding, and it's this 96 level. So it's just the 105.40s to lows here, 50% short at the 96s. That's where the resistance is coming in now. So the market's in a bit of a knife fight, trying to figure out between this support and resistance what to do. Equal legs up, however. A, B, C up for the Aussie Yen would put the Aussie Yen into a 97.60 area. So that would still dip into this 96 level, but it would still all be valid. So keep that in mind. And then there is a next in the series long drawn from a 72 to high here for the Aussie Yen. And that is the big support level at the 88.70s that has been holding support. That comes to us from the 2008 lows to the highs after. They broke a 61.8 line off of the prior all-time high. The market actually pulled back into the 72s, which was a 50% long, and it went to its targets up here at the 105.40s. It blew through its targets. Its targets were only like a 98. So it went well into targets and now has pulled back into the next in the series long. This looks like 5 down, and they're trying to do 3 up here, or have done 3 up. So I am cautious because if this much larger daily chart takes a dip, we're heading down into a full halfway back long from the 2008 lows to the 105.40 highs here, and that would be a gift down around 84 to 82 level. So we'll talk about that if we go back below 94s, because we're going to have to be aware that this market has a line in the sand for the shorts, and they've gotten their participation at the 96. So for the very short term, there is an opportunity to be in an Aussie long here, but your risk is very limited, 40, 50 pips for a shot towards new highs. Otherwise, this market could be in a much larger daily short already. Okay. Just got a question, where do I see the inflection zone for the pound yen? Right now, it's a 171 area, so it's the 171.20s to 170.90s. It's the 50% long or the 100% extension. Anywhere in that area, you want to be a buyer. And again, you're risking 80 pips, first target of 80 pips, and your targets are almost 1,000 pips, the ultimate target for that swing. All right, back to the Aussie. Let's take a look at the Aussie US dollar now. Aussie US dollar also equal legs down off the highs. This completes a 6-wave correction down in 1, 2, 3, 4, 5, 6, 7. I'm sorry, 7 waves. And it's actually the connector wave, that wave 4, that is where you measure the equal legs from. So equal legs have traded. They traded from the 92.60 up into the 93, which was the 40 pip inflection off this level. There is also going out to a 4-hour chart here, there is an extension long also at this level we can find. Its inflection get free area or first targets are the 93.20s, and that's from the 92.60s as well. So otherwise, a full halfway back would take us down into a 90.60 for the Aussie. And going out to a daily, guys, there's not much in the way for a daily chart to not rally up into a full halfway back short here, drawn from the 110 to 86 lows. Gold would have a potentially similar rally into like 1500 area for a short, but up into this 98 area to complete some kind of 3-wave expanding flat would kind of be ideal for this market. But we'll see. The reason being is that it broke the 61.8 line of this prior swing and could easily pull back into a full halfway back long now, an ambush long at the 90.60s. So ultimately looking to be a buyer of the Aussie US dollar still. But the question is, does it do a bigger, is it going to do a bigger pullback now or not? The inflection zones are all here. Invalidation points are set. They invalidate. You've got your answer. There's not much going on a short or smaller time frame below an hourly chart here. Okay? Just these bigger levels to concentrate on. But still technically corrective from the to the downside. Let's move in. This could be a nice leeway into Euro Aussie here. Euro Aussie from a 4-hour perspective has gotten a great reaction now off of equal legs down. The 147 level was 50%, or was the 100% extension for equal legs. We do have short-term extension shorts coming in and equal leg resistance, 3 legs to the upside resistance here. That is coming in between the 149 and 149.30 area. So if you want to be a short, this is the area that you're trying to be short from. The only problem at this point is, guys, is that they've already gotten their reactions to their first targets. Okay, so it already sold off from a 149.30 to its first target of a 148.70. So there's a 60 pip move there. That was just the first target was filled. Okay, so they've already gotten their initial targets filled. They're already free. You know, anyone in this trade is already free from a 150 short. But the 47 longs, most importantly, they too are free as they've gotten their initial first target filled. So the bounce from the 147s into the 149 initial 200 pip first target for a 147 buyer. Taking a step back further to a daily chart, we have a much larger daily support level that comes in at the 145s. This is an extension long that has traded once last year and took us to the 158 highs. The next in the series for that trade, in other words, after the targets are filled, it pulls back into its next in the series. That comes down at a 145. So shorts in the near term could take us down to that level. If you notice, trading down to the 145s keeps even the equal legs valid. So we're kind of at a point of decision for the Euro Aussie and probably the Aussie as well, that if the Aussie can't catch a bid here, as we see in the Aussie Yen and the Aussie US Dollar, we're very close to potentially breaking, and we look for a move into 150 on the Euro Aussie. We look for a move below 94 on the Aussie Yen and a move below a 92 to 92 area on the Aussie US Dollar. We'd look for that all together to confirm that maybe the Aussie has now shifted, the Euro Aussie has shifted, and now the better buy is a Euro buy versus an Aussie buy in the short term. Okay, because the Euro Aussie has been the key indicator for, okay, where's the strength between the Euro and the Aussie, right? That's what it tells you. And over the last few months, it's been a buy the Aussie market because the Euro Aussie is obviously coming down. And now once the Euro Aussie finally does find support and confirms that support, that's what's going to switch our mentality to being a buy the Euro market. Not necessarily sell the Aussie, but certainly buy the Euro. Which brings us to the Euro US Dollar. Has an ambush long that's traded off the 137.80 area. It's on a 4-hour chart. It's the 50% long here that's traded. It's still running into 50% short resistance. So this is the range between a 50% short off this high and a 50% long off this low. Okay. Stepping back a little bit on a 4-hour chart, you can see it's gotten a reaction from both equal legs down. 1, 2, 3 equal legs down. That was also a 50% long off of the prior lows. It then broke the full short off the highs and it's pulled back into an ambush long. Let's just imagine for a moment it does do and this is all a B wave, and it does go C down. A 136.10 to 136.20 is our next level of support, as that's a larger 50% long here for the Euro. So a lot of support still below us, still looking for the market to Euro to head to 141, potentially even from the current levels. If for whatever reason it does give you, it's got the setups now to take us to 141 from right here. If for whatever reason we're wrong and it breaks down, the next level you look to be a participant at is that 136.20 area. That should then take us up to 141s, and that will provide an answer for the larger time frame charts and maybe the rally into 141. It's waiting for that Euro Aussie to turn. Okay. So again, watching the Euro closely, because its movements should be relative, very much so, to the Euro Aussie in the short term. Okay. Well, that concludes. Oh no, one last. Let's take a look at gold. This will then conclude our run through, and we can take on some questions. Gold currently front ran a full short off its prior high. This traded after the full long off of prior lows traded. So we're caught between two levels on gold, and you can see how we're getting the reactions from these. 50% short from this prior swing to low. We've ran into it, got a reaction, now dipped into it again, and it's holding right at that level. So gold bulls want to see us back above a 103 or 1307, 1310 area, and then look for, you know, a buy the dip pullback. Bears want to see these levels hold, potentially even complete an A, B, C wave flat up into a 135 or excuse me, a 1335, 1340 area. But from a daily perspective on gold, it's very similar to what we're looking at in the Aussie US dollar. The correlations are extremely tight. This is not a correlation here. This is a this shows me the open interest in gold. It's like a volume indicator. But the idea here is that a move into the 98 to 1.0 in Aussie US dollar would correlate with a move into 1551 on gold. So far, gold is basically range bound at lows, and we can't ignore the fact that we have you know, lower highs and, technically speaking, higher lows so far in gold. And while this does look like a three-wave correction, even a flat in gold, which we need to, you know, give it justice, should take us, you know, into where the 50% targets are of this long off the lows, which would be a 140, or I'm sorry, a 1440. So if this does do three legs up, looking for 1440s to the upside for the gold. You know, there's a lot going on. This is kind of reminiscent of the euro and the dollar yen at this time, both sides getting reactions, and that means a chop fest and potentially a range bound market. So I'd like to see gold, personally, I'd like to see it trade up into 1550s, 1600, and then pull back into its major full halfway back long. And this is an idea we've been talking about for a long time now. It's going to take years, months to, you know, play out and to confirm, but it is the long-term idea for gold, is that, you know, there's a major support at a full 50% long, which resides down at a very technical 1000 area. It's actually a 960 price level on gold, and it would be from zero to all-time highs. That would be a full 50% halfway back. So very technical level. Gold in also, you know, it's three legs down here. Not equal, but it is three legs down. So maybe some kind of this could be some kind of wave one, then a flat, wave three, then a four wave triangle before fifth wave to complete five waves down. But easiest way to call this is three waves down now. What if three waves up and then five or three down to a larger long? It's the easiest count for the longer term. Doesn't have to be right, because the short-term technicals are going to confirm or deny this very shortly here. So, all right, with that being said, that concludes our run-through of the charts today and the recap. I'll be posting another video this weekend after the close to kind of bring up to speed where all of these markets are. But with that being said, have a great day, everybody, and I'll be back with you as price action develops.